Everyone debates whether the pullback at the end of trading today was, well, something ominous or just a pause that will refresh. Let's bring in the man who tore up YouTube with his prescient calls on the stock market. He even appeared on this show when the Dow hit 7,500 and warned of more losses. With the Dow now on track for its best July in 70 years, that would be since 1939, is the perma bear ready to come out of hibernation? Let's play bull market or BS with Peter Schiff, president of Euro Pacific Capital. He's on the fast line. Where do you stand today, Peter?
Well, I still think we're in a bear market. I mean, I think the bear market's going to last for a long time. We're clearly in a bear market rally. Markets are rallying. They're rallying much faster overseas than they are in the United States. It's not even close. And, of course, the last time I was on your show, I pointed out that the dollar rally was not going to last, and it hasn't. The dollar has fallen precipitously since March, and that's undermining the real returns that investors think they're earning on U.S. stocks, because what they're gaining nominally as the stocks are going up, they're losing it in purchasing power as the dollar is coming down.
Well, in fact, the dollar is actually up since March, and the dollar actually bottomed back in December and bounced off that same bottom later this week. So it actually has traded sideways to upwards from that point, and that's actually a place that I think a lot of people think we're going.
The dollar index got close to 90 in March, and now it's just below 80. So it's fallen rather sharply.
I thought you said the dollar index had gone. The dollar index hit a bottom at 78.30, which it's bounced off of a couple times over the last 6 months.
No, it hit that bottom a couple of days ago. But earlier in the year, when the dollar was rallying, the dollar index was up near 90. And that's where it was early this year, late last year.
But I don't have the chart. Let's move along. Peter, go ahead. Next question.
I'm sorry. Peter, it's Guy. How you doing? Listen, there's no question that you called everything that happened last year to a T. We said that last time you were on. But you would admit as well that you had a rough year last year. And I don't want to talk about that. But how do you now invest? Like, what's the trade going forward in your mind now, right now?
Trade. I mean, last year I had a rough year. This year is the best year I've had in the history of my career as a stockbroker. I mean, you know, a lot of the foreign markets have doubled in this year or since late last year. So, and the dollar has weakened. I still think the trade is to get out of the U.S., get out of cash, get out of bonds. I think bonds are a huge disaster. And I still think U.S. stocks are not going to deliver real inflation-adjusted positive returns for another 5 or 10 years.
Peter,
even
it's
if
Joe.
Stocks go up in value, there's going to be so much inflation that I think the rise in the price of stocks will lag behind the rise of the price of other goods. And I think if you price U.S. stocks in gold, it's going to be a disaster.
Peter, it's Joe. If you've had the best year you've had in years as a stockbroker, congratulations to you. The question I have is, you have a bearish opinion of the market right now, so you're obviously doing a phenomenal job managing a bearish position against a bullish tape, but you're coming to me and you're telling me the doom is still going to be with us, and okay, I'm with you on that. At a certain point, though, where do I stand in believing you with now the political angle that you may be working on up in Connecticut?
Well, remember, the reason I'm making my accounts are doing well is because I'm long. I mean, that's why I did poorly in 2008. I'm not short stocks. I'm long. I have a lot of exposure to China. I have a lot of exposure to natural resources. And so those stocks are doing extremely well this year. But I know that the underlying economic problems that I identified correctly a few years ago have actually gotten worse, not better. The actions that the Federal Reserve and the U.S. government have taken have actually undermined our economy further and worsened the problems. And so we're going to have a bigger collapse as a result of what the government has now done. You have to remember that the problems that came to the head in 2008, those problems are the result of the stimulus and the intervention of the Federal Reserve and the government back in 2001 and 2002, when they artificially tried to get us out of that recession. What they've done this time is worse. The problems that they've created are worse.
Peter, we can't blame you for fighting the good fight. You always do. Thank you for being with us. I know you will be back soon. All right, and we want to go around the floor today.